can see time is around 8:30. Let's look into gold trade analysis on Wednesday as well as Thursday. And I have explained you on my previous video on 22nd of April how you could have traded, and I showed you multiple entries. And if you go and watch my previous video on gold analysis, you can definitely see there was a lot of opportunities for you to take gold analysis in a 5 minute as well as in a 1 minute time frame as well. So let's look on an intraday basis and see how you could have traded daily time basis and see how you could have traded on gold. And you can see here, guys, that the market swept the all-time high and closed within this range over here. You can see the sweep of this liquidity and price closing below yesterday's, the previous day's range. So what we could have looked for is looking for low over here for the next day. And this was on 22nd. So on 23rd, you could have looked for this low over here, high over here. And you can see the market after this kind of bearish momentum again came all the way to these levels over here. And even after this low, you could have looked for this low. And well, market breaking, you could have seen even this low also. But here you can see the market swept this low and closed within this range. But the market sentiment was bearish because the market closed below this previous candle's low. So clearly indicating bearishness. So what you could have looked for is in case if the market breaks this level, you could have expected further momentum towards the downside. But you can see this rejection of price and closing above the 9 moving average, clearly indicating some sort of bullishness. So you could have just marked yesterday's low only, guys, and looked in case if the market shows some sort of reaction here. So in case if the market breaks this level, you could have expected further downward momentum. But here you can see the next day the market gapped up and showed some kind of bullish momentum. So the market formed an insider candle. So this is an indecision candle. So what you can see is that the market sweeping this high over here. The market swept this high over here and rejection of price from this level. So what you can expect further is that you can expect the market to come all the way to this level and even this level as well. So what you can look for in gold analysis is bearishness, guys. So you can expect bearish momentum. So this low will be taken out and this low also taken out. So it's better to exit your position in case if you might have been holding on to long trades, because you can see this rejection of price from here. So there is a very good chance the market might reject price from these levels and reach all the way to this low, guys, even this low also. So, and you can see this kind of bearish momentum. So if you try to plot the high of this candle to the low of this candle, you can see the market came and rejected price from 0.38 level over here. You can see the 0.38 level price rejection. So you can expect some kind of huge bearish momentum. So it's better to exit your long trades in case. So it's better to look for short trades, guys. So on 23rd, guys, definitely after this kind of huge bearish momentum and market rejecting and closing below this range, so you could have expected a huge bearish momentum on Wednesday as well. And after this sweep of from lower levels and closing above this candle's range, so you could expect some kind of bullish momentum, and you can see this kind of bullish momentum. Right? So let's look into a 15 minutes time frame and see how you could have traded here. So what is here is that the market over here, guys, if you consider this candle over here, so let's plot here, guys. So this is the high of yesterday. So let's extend it towards the right side, I guess. Okay. So let's look into a 15-minute time frame and see how you could have traded here. So this was yesterday's high, guys. The market went, swept this high and closed within this range. So what you could have expected is the next day market closing below this level. So you can see the market gap down. Again, the market showed some kind of bullish momentum, but this bullish momentum was not sustaining as it faced rejection from yesterday's close levels and came all the way towards the downside and swept this low over here. You can see the market next targeted this low, and the market again swept this low over here and closed within this range. In case if the market sweeping this low could have closed below this levels, guys, you could have expected further bearishness, but you can see the market swept this low and closed above this previous candle's range. And further, you could expect some kind of bullish momentum. And what you can see, the market headed bullish. But what happened here is that the market swept this yesterday's high and rejecting price from here. So it's better that the market sweeping this high, guys. There is high chance the market might continue further bearish momentum. So I hope you're understanding what I'm explaining on you on a daily time frame analysis, guys. So this is how the market behaves. So 80 to 90% of the time, the market respects this daily time frame analysis whenever the market sweeping yesterday's high and closing. So it gives you a better picture of how the market moves, guys. And you can see the market sweeping yesterday's high and closing below. So you will focus mostly not on long positions, guys, whenever such kind of sweeps occur. So you will focus most of your energy on downward momentum. So there is high chance the market might continue downward. So mark my words, guys. Is now time is around 8:30. So there is a very less chance the market might break this level. So there is a very good opportunity for the market to come all the way to from 3,350 to 3,300 and 3,260 as well. Yeah, another 100 points in downward rally is what I'm expecting. So if you are like seeing my video right now, you can definitely take my short position. So there is high probability the market might continue further bearish, guys. So this is my trade analysis. You should wait for change of character or any of that formation, only then you can take short position, guys. So better wait for any confirmation, only then you take position. So you can expect the market again reaching this high and sweeping further also. So the market again once more might sweep above these levels and continue further bearish as well. So this might be a smaller sweep, but you can expect another bigger sweep and market rejecting. But definitely even after rejecting price from higher levels also, the market might continue bearish and market might come show and close below these levels only, guys. So it's better to look for short trades rather than looking for long position. So this is my intraday bias time frame analysis. So let's take this out. And I have explained you on daily time frame analysis how you could have taken these trades in a 5 minute as well as in in 5 minute as well as in 1 minute time frames as well. So currently I am like using a 5 minute time frame analysis. So let's plot the VWAP level over here. And let's plot the VWAP level on yesterday also, like the previous swing momentum. Definitely the market you can see is very show here. So it doesn't show any confluence over here. So what you can see here, guys, the market sweeping is the previous day low over here. You can see the market swept this low. So this was our target, what we have expected after price rejecting and closing below these levels. This was our target, guys, which I have marked here. The market sweeping low and showing some kind of bullish momentum. So what you can see is that the market consolidated. In case the market sentiment would have been bearish, the market would have continued further. But what you can see here is that the market formed a breakout structure over here, guys, with a fair value gap, as well as you can see a clear chop formation over here, or you can consider a market structure shift, clear market structure shift, and market even broke these levels and with fair value gap and imbalance candle and clearly showing some sort of bullishness. So this is in a 5 minute time frame as well. So if you consider this swing momentum towards the upside, and if you try to plot the fib levels over here, the common point within this to the common point within this, you can see the market reaching all the way to this optimum trade entry zone over here. This is the optimum trade entry, guys, where you could have entered long position, keeping your stop loss just below this candle itself, below the daily VWAP level. You can see the VWAP level here showing some sort of confluence over here where price is rejecting from the daily VWAP level, clearly signifying bullishness. And for target levels, guys, you could have plotted the fib extension levels, the common point within this, to the common point within this, to the common point within this. So you could have easily targeted the 1.68 level over here. This is the 1.68 level where you could have taken. So all the way to this level over here, guys. And you can see you could have further targeted over here towards the upside. But what you can see is that on the intraday time frame analysis, I have told you, in daily time frame analysis, I have told you that the market sentiment is bearish. So you should always look for downside. As you can see, this kind of huge bearish momentum. So what you could have done is that again, the market retraced here, guys. So if you consider this swing momentum over here, so if you consider the low of this candle to the high of this candle, you can see market rejecting price from 0.38 level over here. This is the 0.38 level where price is rejecting and market broke this structure high, guys. You can see clear breakout structure here, has clearly indicating bullishness over here. So, and you can see after this kind of momentum towards the upside, the market would have retraced again further to 50 levels or 0.38 levels or the 9 or plus 21 moving average and continued further upside. This is how usually, in case the market sentiment would have been bullish, this is how the market behaves, guys. But you can see after this huge bullish momentum where price took support from 0.38 level, the market rejected price from these levels, or you can consider to be yesterday's close levels, and broke structure towards the downside. You can see a clear break of structure towards the downside, guys. This is a clear chalk formation over here. This is a clear chalk formation. And you can see this kind of huge bearish momentum. This is the last up candle before it broke structure towards the downside. And you can see this kind of pattern formation clearly indicating bearishness. So this kind of pattern formation, guys, this always indicates bearishness. Whenever the pattern formation is towards the downside, it indicates bullishness. And whenever the consolidation is towards the upside, it indicates bearishness. And you should mark my words. This pattern always repeats, guys. And you can make confluence. You can have better confluence with the VWAP levels also. You can see VWAP levels trading above. So you can see after this also the market here consolidating in a pattern over here, and after this the same kind of pattern is. I will show you. Wait a second. The same kind of pattern consolidation which happened over here as well. You can see clearly indicating bearishness. You can see there is no strong support over here, even though the market reached all the way to this demand zone over here, or what you can consider the order block level. So this was the last down candle, guys, which broke structure towards the upside. So the market mitigated this order block. Once if this 5-minute order block has been mitigated, it doesn't hold any value. So after seeing this kind of bearish momentum, you could have entered short and targeted it all the way to the order block level as well. But in case if you might have missed out on this trade also, guys, or what you could have plotted is that the last support zone over here, the common point between this to the common point between this. Once if this 50 levels has been broken, you can see the 0.5 levels over here is being broken towards the downside with aggressive momentum and price rejecting from these levels, guys. You can see the price rejecting from the 0.5 levels and closing. But with this candle, you could have easily entered short position, keeping your stop loss just above that candle itself, seeing that this kind of aggressive selling. And on a daily time frame analysis, we have already mentioned that our bias is to look bearish only, but you can see you could have captured this momentum as well. So let's not consider this trade, guys. So this was one aggressive entry where you could have taken and you could have made a decent profit over here. So if you consider the high of this candle to the low of this candle, you can see the price rejecting from 0.38 level over here. This is the 0.38 level where price is rejecting, as well as you can see the fair value gap over here is being mitigated over here. You can see the fair value gap mitigating as well as closing below this range. So in case if you might have seen this and rejection of price with this bearish candle and price breaking, guys, or you can consider this consolidation over here, the common point between this to the common point between this, you can see the 0.5 levels been broken and closed below these levels. Clearly, at this moment, you could have entered short position. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this. So you could have targeted it all the way to 100% move, or in case if you might be holding, you could have targeted it all the way to this level as well. So if you consider this whole swing, guys, let's see in case if you consider this swing momentum, you can see, guys, exactly the market coming all the way to this levels. Instead, what I considered is the last up move before it broke structure towards the downside. But this consolidation, you can consider this single momentum as one momentum because, guys, there is no proper retracement, guys. For you to consider this to be a retracement, if you plot the common point between this to the common point between this, a minimum retracement of 0.38 level is what is needed for you to consider this pullback as a retracement. But you can consider this whole momentum towards the downside as a single momentum because this is not a proper retracement, guys, and you can see this V-shaped kind of recovery where the price broke aggressively towards the upside but aggressively sold towards the downside. This V-shaped kind of recovery is a very strong bearish momentum. So that's why initially I plotted from here, guys, the fib extinction levels, but definitely it's not from there. So you should use the swing high only. So if you consider this swing high and if you consider this retracement levels, let's see in case how this retracement, if you consider these levels over here, the common point between this to the common point between this, you can see the market didn't even retrace to 0.38 levels over here as well, guys. So, but let's try to plot the fib extinction levels in case if this kind of work, this does work out. So the common point between this to the common point between this to the common point between this, you can see the market reaching the 100% move over here. So this was one target where you could have targeted it, the 100% move, and further you could have targeted it all the way to 1.68 level. You can see, guys, the market coming all the way to this level as well and rejecting price from these levels as well. So this was another trade entry, guys. So here the market didn't retrace to 0.38 level if you consider this whole swing over here. But what we need to see here is that the PD array over here, guys, you can see that there is a fair value gap over here. This is an important so because this is a breakaway gap as the market broke structure and leaving behind, and again towards the downside the market left a gap over here. So the market came all the way to these levels, mitigated these levels, and with this candle itself what I'm expecting to take short position now is not above this candle. With the confirmation is where we could have taken short position, keeping your stop loss just above that candle itself. And you can see this candle breaking the 9 as well as 21 moving average, clearly signifying bearishness. So initially you could have targeted it all the way to this 100% move over here, and you can see the market came and reached this 100% move. And if you consider this one single momentum, so if you consider the high of this candle to the low of this candle, and if you try to plot here, as you can see, this is the optimum trade entry zone over here. This is the optimum trade entry zone. Or in case if you try to plot the order block level as well, this is the order block guys. This is the last up candle before the down move. Or you can see this kind of consolidation where the market came. But here the market rejected price from day VWAP level. You can see this is the day VWAP level. Here the market faced some sort of rejection as well as the optimum trade entry zone over here. So, and with confirmation is where you could have entered. You can see a clear break of structure towards the downside here. This is a clear break of structure after this kind of aggressive momentum. And with this momentum, guys, what you could have plotted is the optimum trade entry zone or 50 levels or any of that levels you could have seen. So you can see clearly the market came a rejected price from this optimum trade entry zone over here. This was another optimum trade entry zone where you could have taken short position. So keeping your stop loss just above that candle itself and targeting it all the way towards the downside. So for fib extension levels, you could have plotted this swing momentum or this swing momentum. So let's try to plot this swing momentum initially. So the common point in this to the common point between this to the common point between this. So you could have targeted it all the way to 2.6 level over here. You can see the 2.6 level is where you could have targeted. So let's try to mark the 2.6 level. And in case if you try to plot this fib extension levels over here, so what you could have plotted is the high of this candle to the low of this candle to the high of this candle. So so you could see here you could have targeted the 100% move or the 1.68 level, but definitely the market didn't come all the way to this levels, guys. So as long as the market is trading above the 9 as well as 21 moving average, that's where you could have targeted, and you could have targeted it all the way to this low, or you can consider this swing also, guys. So this swing is where you could have consolidated and you could have tried your stop loss somewhere here or somewhere here or somewhere here, and you can see, or what you could have done is this here, there's a swing over here. This is where exactly you should have targeted the previous swing low. In case if you market breaking this swing low, the next is you would have looked for this low, or you can see the order block level also here. The previous order block level, you can see a clear break of structure over here. So the last down candle which broke structure towards the upside. Here you can see the market mitigated. Here though the market didn't mitigate, but what you can see is this order block level, guys. You can see, let me try to mark the order block level. This is the order block level where you could have targeted it. You can see the market gain. But it's fine, guys. If you might have captured based upon risk to reward ratio, I think that would have been far better. And as long as the market is trading below the 9 as well as 21 moving average, you can see the market here seems to be overextended. So you can either expect the market to pull back. So after seeing this kind of bullish engulfing pattern, since the market has been overextended and market closing above, this is where you could have easily exited your position after seeing this kind of bullish engulfing candle. As well as what you can see here is that the market swept the previous two candles low and closed above this range, clearly signifying some sort of bullishness. So immediately after this candle sweeping the previous low and closing above this range is where you could have easily exited your long position. And you can see the market here broke structure towards the upside, a clear breakout structure. Either you could have entered here, or with better confirmation, you can see the market breaking this structure over here. So if you consider the swing low to the swing high over here, this is the swing low to swing high, and where the price is entering is this optimum trade entry zone over here. This is the optimum trade entry where price is entering. So what you could have done is to take long position here. As you can see, the price is rejecting from these levels and broke structure towards the downside. So you could have expected some kind of bullish momentum as the market swept yesterday's or previous days previous swing low and closing between this range. So you could have expected some kind of bullish momentum, which I have told you on a daily time frame analysis. And in case if you try to plot the fib extension level over here, the swing low here to this swing high to this swing low here. So you could have targeted the 100% move, the 1.68 level, or you can see you could have targeted it all the way somewhere along these swings over here, guys. So as long as the market is trading bullish, so this is where you could have easily exited after the market closing below above this zone over here. Or what you could have done is to mark, if you consider this swing momentum and if you try to plot the retracement of yesterday's, you could have considered this to be an optimum trade entry zone. So let's mark it here. So if you consider the whole momentum over here as a single swing, guys, so if you consider the high of this candle to the common point between this, you can see this is lying in an optimum trade entry zone, as well as there is a fair value gaps over here. You can see if you consider in a higher time frame analysis, there is a fair value gap over here. So you could have expected the market to mitigate this fair value gap over here and reject price from these levels, and the optimum trade entry zone over here, the 0.78 and 0.75 levels as well. So you could have targeted it all the way to these levels, guys, in case if the market is trending above the 9 as well as the 21 moving average in a 5-minute time frame. You can see clearly the market is consolidating here and the market sentiment is very bullish as the market is trading above the 9 as well as the 21 moving average and even the 200 moving average below here. And if you try to plot the anchor way up level on this day, you can see the market here rejecting price from these levels and trending higher. So long position over here, guys, on yesterday only, keeping your stop loss just below that candle itself and targeting it all the way to this fair value gap. So it's better that before this candle formations only, guys, you should mark out the fair value gaps in a high time frame analysis and mark out your levels, guys. And in case of the market is trying to move in your favor, you can definitely hold on to your position and trade based upon that. And in case if the market is not favoring, so trial your stop losses all the way along here, and only by that you could have easily exited in case if the market is against your direction. And you can see moving averages definitely will help you to make a better decisions whether you should take a long position or a short position. So you can see, guys, this swing momentum over here, why the market came all the way, mitigated this fair value gap, and the market came all the way here to ish to the next day. The market came all the way, swept this high and closing below this range, clearly signifying bearishness. Even though the market might show some kind of bullish momentum, definitely I told you in my video in intraday basis, the market will definitely come all the way towards the downside, guys. So there is a very good probability that the market might break towards the downside, and there is a very less chance the market might head bullish. Even though the market is will head bullish to all these levels over here, the market might reject and continue further. But here you can see the fair value gaps here has been mitigated, right? So there is no point in market moving towards the upside. So there is a high probability the market might continue further bearish. So you can see the market mitigating this fair value gap. So you could have either exited your position over here, but what you can see is that the market here, guys, the market consolidated over here, broke structure, again consolidated and broke structure towards the upside. And immediately at this fair value gap, the market rejected and formed a chalk over here. And I hope you're understanding. This is a clear chop formation over here. It's the market rejecting price from these levels and breaking structure towards the downside. And what you could have done is to plot the fib levels over here, expecting the market might reject price from these levels and continue. So if you plot the high to low of this candle, you can see the market rejecting price from this level over here. This is the optimum trade entry zone, which I have marked you, which I told you previously. The optimum trade entry zone where you could have taken short position. But in case you could have either expected the market to be bearish here, taking support from 21 moving average and further breaking towards the upside. This is how you could have expected. So what you could have done is to mark the low over here, guys. Once if this neckline, since the retracement is very small, so you could have marked the neckline retracement, and once the neckline has been broken down with this kind of huge aggressive candle over here, this is where you could have taken short position, keeping your stop loss just above this candle itself. So in this candle over here, you could have looked for in a 1 minute time frame. So once if that low has been broken, so let's see here in a 1 minute time frame, you can see this low is where the market might reject price with this candle, the market breaking this neckline liquidity. This is where you could have entered and targeted it all the way to swing. So let's look into a 5 minute time frames and analyze how you could have traded. You could have looked for all the way to these demand levels, guys. You can see this demand over here, the last down candle which broke structure towards the upside. So what you could have seen is this kind of consolidation. This is the last down candle, guys, which broke structure towards the upside. So either you could have targeted it all the way to this level or anywhere along this level. This is where you could have targeted. Or you could target this swing low or the 200 moving average here. You can see the price rejecting from 200 moving average is where you could have, or you could have just hold it on to your position, and you can see how the market came all the way to these levels. So this was one entry where you could have taken. Either you could have taken your position here itself, guys, after seeing this kind of rejection candle towards the short side, or in case if you try to plot the fib extension level here, guys. So let's see in case if this fib extension level works out or not. So if you try to plot the fib extension here, the common point within this, to the common point within this. So what you could have done is to target the 1.68 level and just holding on to your position and target to 2.6 level. But here you can see the market all the way came here, guys. So this is where the market rejected and came all the way to this level. Definitely the target is hit. So if you consider like this, it's a very long trade, guys. So you could have either exited at the support levels at the 200 moving average, guys. I hope you understand. In a shorter time frame, there are many trades where you could have taken, guys. There are many scalps where you could have taken, but definitely I won't recommend you. But always look into a higher time frames and look and take positions based on that. So you can see this is the last up candle which broke structure towards the downside. So what you can consider is either if you plot the swing high over here to this common quantity list, you can see the 50 levels over here. Or if you consider this swing momentum, it also shows 50 levels as well. But what you need to plot here is that there is a fair value gap over here in a 5 minute time frame. So definitely you can expect some kind of mitigation of this fair value gap further on. And you can see this is a failure swing, guys, where the market failed to sweep above these levels and broke structure towards the downside. So you can expect either this failure things to be taken. So there is a liquidity over here, there is a liquidity over here, there is further liquidity over here. And what you can see is that you can see this kind of bullish momentum. This bullish momentum is not as strong when compared to this bearish momentum towards the downside. But what you can see here is that in case if you wanted to take long position also, as you can see clearly the market broke structure towards the upside here, where price is taking support from this demand over here and rejected price from this day VWAP level, or you can consider yesterday, this is yesterday's VWAP level and broke structure towards the upside. So let's take these VWAP levels out and broke structure towards the upside. So what you could have done is to plot the fib levels over here, the common point within this to the common point in this. You can see the price taking support from 200 moving average over here, or the optimum trade entry zone over here. You can see this is the optimum trade entry zone where price is taking support, as well as the 200 moving average support, guys. So there are two confluences where you could have taken long position here. And in case if you try to plot the fib extinction levels over here, the common point within this to the common point within this to the common point within this, you can see you could have targeted it all the way to this 100%. You can see the market came all the way to this level, guys, even though there was very less confluence over here. So long position here, keeping your stop loss just below that candle, previous candle itself, or swing low, and targeting it all the way to 1.68 level. This is where you could have targeted it, guys. Or you can consider targeting this swing high over here. So the previous swing high is where you could have targeted. So, and you can see the market showed some kind of expansion, consolidation, and reversal, guys. So this momentum here changed the whole sentiment from here being bullish to bearish over here. So again, the market swept this low. So what you could have waited is that after this kind of huge bearish momentum, you could have expected the market coming all the way to this order block levels, rejecting price from these levels and continuing further. But what happened here is that the market sweeping this low, and you can see this sudden recovery after the market sweeping the previous low, the V-shaped kind of recovery, clearly indicating some sort of bullishness. And if you consider this order block level as well, the order block level here has been mitigated over here. So this doesn't hold any value. So what you could have done is that after this kind of rejection of price, and you could have expected further continuation of price towards the downside, but you can see the market here taking support over here and again rejecting price from this level. And here the market broke structure towards the upside, changing the market sentiment, guys. This is the place where the market changed its sentiment from being bearish to bullish, and this is the break of structure. And again, the market came to this order block levels, again showed rejection of price from these levels and continued further. So you could have either plotted the uh, fib levels over here. You can see the market rejecting and closing above this optimum trade entry zone over here. Price rejecting from lower levels and mitigating the order block as well. This is the optimum trade entry zone where you could have taken. You can see the market coming all the way to this order block levels, rejecting price from this and closing above the optimum trade entry zone, clearly indicating some sort of bullishness. And what you can see is that in case if you try to take this, guys, the market swept yesterday's low and even closed above the previous candle's low, guys. You can see clearly indicating bullishness. Whenever the market sweeps and closes above the previous candle's low, that indicates a very good bullishness. So this is what I wanted to explain to you in a shorter time frame, like in a 5-minute time frame. So in case if you try to plot your fib extinction levels here, the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move, the 1.68 level over here, the 2.6 level, or you could have marked all the way to this level because this was a failure swing high. So you could have expected the market to sweep this high. So 3.6 level is where you could have easily targeted because this was a failure swing. So you could have either expected the market to sweep. So long position here, guys, keeping your stop loss just below that candle itself and targeting it all the way to the 3.6 level. So I hope you're understanding, guys. And you can see the market here trading above the 9 as well as the 21 moving average. So let me add on to my trades even here also, guys, in case if you are expecting how you could have added on to your trades. So you can see the bullish candle over here. Here the market broke structure again towards the upside. So either you could have expected the market to come to 0 point optimum trade entry zone over here. So if you consider this swing momentum over here, the low of this candle to the high of this candle, the market didn't retrace to 0.38 level. So you can consider this swing momentum as a single momentum. So the common point in this. So you can see the market here retraced to 0.38 level over here. So this is the 0.38 level where market retraced. So if you consider this retracement over here, the down to low of this candle, once if this 550 levels has been broken towards the upside, the 0.5 levels, you can see here the zero point 0.5 levels where market breaking towards the upside. And you can see if you try to plot the price rejecting from 9 as well as 21 moving average, price taking support from 0.38, clearly signifying bullishness. So either you could have entered long position this candle only, guys, keeping your stop loss just below that candle itself. I'm always very keen on taking one candle of stop loss, guys, and targeting all the way towards the upside. Or or if you consider this swing momentum where the market broke structure towards the upside, you can see a clear break of structure over here. And if you consider this swing momentum over here, so the low of this candle to the high of this candle, you can see the market came and mitigating this fair value gap over here. You can see this is the fair value gap over here where the market mitigated. And if you consider this swing momentum over here, the high to low of this candle over here, and you can see with this bullish candle where the market showed some kind of bullish sentiment. Maybe let me mark the zero point 0.5 levels over here. So with this candle over here, guys, so with this bullish candle over here, where you could have easily kept your stop loss just below that candle and keeping your stop loss here. And you can see moving average support as well. And you would have targeted it all the way towards the upside. So in case if you try to plot the fib extension levels here, so let me try to plot fib extension levels here as well. The common point between this to the common point between this to the common point between this. So you could have targeted the 2.6 level or 1.68 level, or in case if you might have entered at this swing momentum over here. So let's try to plot the fib extension here, the common point between this to the common point. So the swings are all black only, guys. So you should use swings over here. So you can see, guys, the 1.68 level over here is where you could have exited, or this the sweeps of this liquidity once the market sweeping this high and showing this kind of bearish momentum is where you could have exited. So better than the target levels, you could have used the candlestick formations. You can see the market sweeping the previous highs over here and closing below these ranges is where you could have easily exited and you could have trialed it all the way. I'm showing you a risk to reward ratio. You can see a 1:20 risk to reward ratio, guys. I'm not just I'm not explaining 1 to 1 or 1 to 2 or 1 to 5 risk. All my trades are minimum. Like I can't explain to you like how you can only see guys how small my stop losses are and how big my profits are. So you can see how the momentum here is. So this is how you could have taken, guys. So definitely you can expect some kind of bearish momentum. This is what I'm expecting. So what you can see in a daily time frame as in another 1 or 2 days, guys, there is a very good chance the market might break all the way to the 2000 3250 levels as well. So it's better to look for bearish setups, guys, rather than bullish ones. Or or you can see the sweep of this liquidity. Once if this sweep of this liquidity is being broken towards the upside and show some kind of bullish momentum, there is a high chance the market might go bullish. But as of now, the market sentiment is bearish only, guys. So you should look for short setups only. So that's about my gold trade analysis, guys. So in case if you find my videos helpful, please like, share, and comment. Share with your friends and family as well. And hope you like my way of teaching, guys. So this is how I usually trade, and that's why I would love you also to use how I am trading, guys. So be practicing only through practice only. Definitely, you can also master, and there might be chances that okay, you can make wrong decisions in trading, but try to correct them, guys. Why and analyze why you have taken this trade and every error what you have done. Trying to correct all those errors, guys. Only then you can become a profitable trader one day. So keep making mistakes, guys, and keep failing, guys. Only then you can become a successful trader one day. So that's it about for today, guys. Thank you.